Okay, now we have to discuss about another account standard, that is Indas 34, interim financial reporting. The international standard related with the interim financial reporting is IAS 34. Now we have to discuss about the latest and simplest version of Indas 34 and IAS 34. What are the account standards related with the interim financial reporting? First, Indas 34, then second, IAS 34 and IFRIC 10. Then now we have to discuss about what are the differences between Indas 34 and IAS 34. There are some differences between those two account standards. First one, as per Indas 31, it allows only single statement approach for preparing profit and loss. Indas 34 allows only single statement approach for preparing statement of profit or loss. IAS 34 provides option either to follow single statement approach or to follow two statement approach for preparing statement of profit or loss. The relevant terms as per Indas 34 are statement of profit and loss and balance sheet, but the relevant terms as per IAS 34 are statement of comprehensive income and statement of financial position. And now we have to understand what is the objective of this account standard. Objectives of Indas 34 and IAS 34. First objective, to prescribe minimum content of an interim financial report. Second, to prescribe the principle for recognition and measurement in complete or condensed financial statement for interim period. As per Indas 34, you may prepare either complete financial statements or condensed financial statement. Therefore, this account standard prescribes the principle for recognition and measurement in complete or condensed financial statements for interim period. Then, scope. There is no mandatory for entities to follow this standard, but government and regulatory bodies like SEBI and Ministry of Corporate Affairs often require entities whose debt or equity securities are publicly traded to publish interim financial report. Even though there is no mandatory element for the entities are concerned to publish interim financial report, but most often some regulatory bodies of India have directed certain entities to publish interim financial report. Okay. Then, if an entity's interim financial report is described as complying with Indas 34, it must comply with all the requirements of the standard. I will repeat the point again. If an entity's interim financial report is described as complying with Indas 34, then it must comply with all of the requirements of Indas 34. Some definitions are given in the standard. First, interim period. What is interim period? Interim period is a financial reporting period shorter than full financial year. Financial year means 12 months starting from April 1 and ending with the 31st March. Interim period is a financial reporting period shorter than a full financial year. Like second definition, interim financial report. Interim financial report means a financial report containing either a complete set of financial statement or a set of condensed financial statement for an interim period. Then, content of an interim financial report. Interim financial report may be complete financial report or condensed financial report. When complete set is published, then you have to follow Indas 1. If you have decided to prepare a complete set of financial statements for the interim period, then you have to prepare a financial statement as per Indas 1. Then, what are the financial statements as per Indas 1? First, a balance sheet as at the end of the period. Second, a statement of profit and loss for the period. Third, a statement of changes in equity for the period. Then fourth, a statement of cash flow for the period. Then you have to follow the recognition and measurement guidance under Indas 34. And disclosure made by the standard as well as those required by other indices. You have to disclose as per Indas 34 and other indices. Okay. Then, if you are desired to prepare condensed financial statement for interim period, then the minimum components include a condensed balance sheet, a condensed statement of profit and loss, a condensed statement of changes in equity, a condensed statement of cash flow, and selected explanatory notes. Then, for the explanation to condensed financial statement, if an entity publishes a set of condensed financial statement in his interim financial report, those condensed statements shall include at a minimum each of the headings and subtotal that were included in his most recent annual financial statement and the selected explanatory note as required by the standard. Additional line items or notes shall be included if the omission would make the contents interim financial statements misleading. Okay. Then significance events and transaction. There is an explanation about significance event and transaction in the standard. Then what is the explanation regarding significant events and transaction? Entity shall include in its interim financial report an explanation of events and transactions that are significant to an understanding of the changes in financial position and performance of the entity since the end of the last annual reporting period. That means you have to report significant event and transaction since the end of the last annual reporting period. That means you have to report significant event and transaction since March 31 of the year. The reporting period, started for April 1 and ends with March 31. Then end of the last annual reporting period means March 31. Then you have to report significance event and transaction for March 31 to the date of your interim period. Okay. Then the following is the list of event and transaction for which disclosure would be required if they are significant. The list is not exhaustive. INDAS 34 and IAS 34 gives a list of events and transactions for which disclosure would be required if they are significant. Certain events and transactions are given in the standard. You have to disclose about those events and transactions if they are significant. Okay. First, the write down of inventories to net realizable value and reversal of such write down. You have to report if they are significant. You have to report. You have to include in the interim financial report. Then second, recognition of a loss from the impairment of financial asset, property, plant and equipment, intangible asset arising from contract with the customer, other asset, and the reversal of such impairment loss. You have to disclose in the interim financial report. Then reversal of any provision for the asset, the reversal of any provision for the cost of restructuring, not the asset, the reversal of any provision for the cost of restructuring. Then acquisition and disposal of items of property, plant and equipment, commitments of the commitments for purchase of property, plant and equipment. Likewise, litigation settlements, corrections of period errors. Then any loan default or breach of a loan agreement that has not been remedied on or before the end of the reporting period, related party transaction, changes in contingent liabilities or contingent asset, and other disclosures. Okay.